Hi everyone and welcome to the weekly update with me, Richard Perrin, market analyst at Tech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, it wouldn't be right if I didn't talk about Greece, as ever. It seems to be still on the agenda. Now, Greece and the banks have reopened on Monday, and it now means that man on the street can get out €420 per week. Not a great deal of change, but certainly it should help to sort of improve a little bit of confidence, and certainly the fact that the banks are now open to a certain extent, even though the capital controls are still in place, should help to improve market sentiment. And that seems to be the case. Bond yields across the Eurozone are settling down a bit. The markets are pretty much in nicely consolidating mode. And this is helping to drive equity markets higher. Confidence has certainly returned across the Eurozone stock markets, and that is also helping to pull the euro lower, actually, because the euro carry trade seems to be back on in terms of using the euro, which is a very low interest bearing currency, to buy higher risk assets. So that seems to be back in play now. And it also, now the market seems to be focusing probably into the future for this Greek issue, because it seems as though the next real event will be the negotiation of the third bailout, but that comes in a few weeks' time. Now the markets can focus once more on the interest rate differentials between the US market, between the US and other currencies, and that I think is going to be a bit of a theme this week. You had these comments from Janet Yellen last week to Congress, suggesting that a 2015 rate hike was still appropriate, considering the improvement, and if that continued to go, the improvement on the US economy, that was potentially going to happen. So the market is now repricing in a 2015 rate hike. December Fed funds futures, as the table shows you below here, are now pricing in a 57% probability of a rate hike by December. So that's interesting enough. Now that rate hike is more than likely this year. So how is this all going to play out in Forex markets? Well, certainly the dollar has been strengthening, and that is one of the key features of these Forex markets at the moment, the dollar index pushing higher once more. And across the euro dollar, the potential for the key supports at 108.18, which was the key May low, that's coming under big pressure. And if that breaks down on a closing basis, then there's not a great deal to prevent the euro from falling back towards the March-April lows around 104.50 to 105.20. So there is potential downside here for the euro. And on cable, it's a bit of a choppy one, and I think that is being driven again not only by the news out from Janet Yellen and her congressional testimony, but also we had comments from Mark Carney last week suggesting that a 2000 or around the turn of the year there was a potential for a rate hike from the UK central bank, the Bank of England. So that is interesting as well. So that is probably going to end up driving a lot of volatility around cable for the back end of this year, as the data comes out. Data dependency seems to remain in evidence there. So for cable, we're seeing a bit of a choppy move today. Slight negative technicals are seeing that fall away again. The Fibonacci trading range that had developed seems to be breaking, or looking to break back once more to the downside, and that could well mean that some key levels of support come under pressure once again. Now, in terms of the dollar yen, we're seeing some pressure to the upside. The 124.20 to 124.40 resistance band is under pressure. That looks to be pushing higher, and a closing break above that level would reopen those highs again, 125.85. Interestingly, also, as this dollar strengthens, we're seeing the commodity currencies being put under pressure once more, and the Aussie, the Kiwi, and the Loonie, the Canadian dollar, remain under pressure this week. So in terms of indices and stock markets, well, the DAX has had the shackles lifted off since that Greek bailout deal was announced last week, and it certainly has pushed ever higher. It's now pushing towards the 11,920 key resistance, and if it breaks above that, there's no real reason why it can't continue to move higher back towards the all-time highs at 12,389 once more. S&P 500 has got earnings season on its mind. Certainly the big tech companies are reporting this week, not least Apple, and certainly if Apple and the other tech giants come out with some decent results, we'll see some upside pressure, probably pushing that S&P 500 to all-time highs once more, above the 2,135 key level there. In terms of FTSE, there is underperformance going on. That continues, but certainly FTSE is being dragged higher by these other indices, and it still needs some work to be done. It still needs to break above the 6,873 resistance, but it is being pulled higher. Now, in terms of gold, we've had a lot of commodity price pressures in recent days, and that is none more so than gold. Gold had a sharp sell-off in the Asian session on Monday morning, and that has put, cost gold $45 in a matter of minutes. And it's beginning to sort of just try to find its feet again. It's broken below the key $1,131 support there from the November low, and that will now become a resistance level. So we need to now get a reassessment of how the gold price is going to be trading, seeing how it reacts to a rebound, potentially up towards that 1130 level again, and it'd be very interesting to see how gold settles. But certainly the gold bugs are under pressure once more. So for the rest of this week, well, not a great deal of economic announcements to really look forward to. We've got a few bank meeting minutes to start off the week. You've got on Tuesday the RBA, and on Wednesday the Bank of England. Bank of England will be interesting though. As I said, Mark Carney's speech last week alluding to the fact that the bank may be sort of edging towards some sort of a rate hike, possibly around the turn of the year. So we're now looking out for the meeting minutes to see if there are any bank members looking to hike rates. So the prime members would be Martin Wheel and Ian McCafferty, but still it'll be very interesting to see, because there's not a rate hike, there's no dissenting voices expected this month. So if there are any, then that would certainly give sterling a bit of a push. Also on Wednesday, we've got the existing home sales, which is the first of a couple more bits of housing data for you to watch out for. And on Wednesday night, also we've got the RBNZ, the Reserve Bank of New Zealand, with a potential rate cut as well. We've got rate hikes potentially on the horizon for the Bank of England and the Fed, but even though you've still got a potential rate cut coming through from the RBNZ this week, so it'll be very interesting to see what happens there. Although we've had some comments from the Kiwi Prime Minister over the weekend suggesting that perhaps the New Zealand dollar has gone a little bit down too fast, but it'll be interesting to see what happens this week. And then on Thursday, a bit of UK retail sales, but Friday we've got the main ones. We've got a load of forward-looking PMIs, the manufacturing flash PMIs for China, Japan, Eurozone and US, all coming out, and all should be driving risk sentiment on Friday. And then we finish off with another bit of housing data for the States, the new home sales. So a little bit to work on this week, but not some major US data, but still something to watch out for. So I wish you good luck across your trading, and I'll speak to you again next week. Thank you.